The US housing market has been on an absolute roller coaster, right? So, what's next? Today, we're going to look ahead to 2026 and really try to decode the major forces that are going to shape where and how we live. Let's get into it.
So let's kick things off with this really powerful insight from First American's Deputy Chief Economist Odetta Kushi. There are no quick fixes. Recoveries take time. And that right there sets the tone for everything we're about to talk about. We're not looking for some dramatic snapback. This is about a slow, steady return to normal.
So, what's the big headline for 2026? It's progress without a breakout. What that means is, yeah, the market is getting healthier, but this isn't about some explosive growth or prices suddenly becoming cheap. Think of it less like a sprint and more like a long, steady march back toward a market that feels more balanced. Okay, so to really get a handle on this slow march, we need to look at the huge forces that are pushing and pulling on the market right now. These are the big picture dynamics that are going to define housing for the next couple of years. We're going to break it all down into four key areas. First up, the affordability squeeze that, let's be honest, we're all still feeling. Second, the incredible and maybe underestimated power of demographics. Third, we'll talk about how the market looks totally different depending on where you live. And finally, the constant hunt for more homes, the inventory problem. That's our roadmap. All right, let's dive into the central conflict, the core tension that's really at the heart of the 2026 market. And you know what? It's a classic battle. The financial reality of buying a house versus the fundamental human need for one. And this slide just lays out that tension perfectly. On one side, you've got these major financial headwinds, stuff like mortgage rates and still high prices that make it really hard to buy a home. But pushing back against all that is this incredibly powerful tailwind, just life itself. People are still getting married, they're still having kids, changing jobs. And those big life events create this constant, powerful demand for housing. And that tailwind, it has some serious power behind it. Just look at this number, 52 million. That's how many Americans are in their 30s right now, a massive generation moving right into their prime home buying years. We are not talking about a small trend here. This is a full-on demographic tidal wave. And that's where this idea of demographic demand comes in. It's super important to understand. This isn't about people with spreadsheets trying to time the market. No, this is about real-life milestones. And that kind of demand, it sticks around, whether mortgage rates are high or low, which is exactly why the underlying need for housing is so incredibly resilient. Okay, let's build on that, because here's the thing. A single national headline, it just doesn't tell the whole story. The reality is, what the housing market looks like in 2026 is going to depend a lot on where you live. We are in the middle of a great divide. Analysts are calling it a two-speed market, and you can see exactly why right here. In places like the Midwest and the Northeast, supply is super tight, which is keeping a floor under prices. But then you look at parts of the South and the West, it's a whole different ballgame. There's more inventory, some of it from new construction, and that means softer prices and way more options for buyers. It is a completely different world depending on your zip code. But it gets even more granular than that. Even inside those big regions, we're seeing another layer here. Some specific metro areas are feeling a really unique kind of pressure that's creating some weak points in the market. Think about what's been happening in cities like Austin or Tampa. It's like a perfect storm, right? You've got affordability that's been stretched to its absolute limit after the pandemic boom. Then you add in rising insurance costs, especially near the coasts. Maybe job growth is slowing down a bit. It's not some nationwide crisis, but if you're a recent buyer in one of those specific spots, you are definitely feeling the squeeze. All right, so that brings us to the last and maybe the biggest piece of this whole puzzle, inventory. I mean, if demand is so resilient, the multi-trillion-dollar question is, where are the houses going to come from? Let's talk about the supply side. Yeah, this is the big one, isn't it? We hear so much about the lock-in effect, and it's real. People who have these amazing 2 or 3% mortgage rates just do not want to sell and take on a new loan at a higher rate. So, if they're all staying put, where does new supply actually come from? Well, the answer is basically a two-part story. First, that lock-in effect on existing homes, it's going to loosen up, but gradually. It'll be driven by those big life events we talked about, not because rates suddenly drop. But the second part of the story, and this is huge, is new home construction. Builders have a massive advantage. They have inventory that's ready to go, And they can offer all sorts of incentives, like buying down your mortgage rate, to make the deal happen. Okay, so we've hit all the big points: affordability, demographics, the regional split, and inventory. Let's pull this all together. What's the one thing you really need to take away from this 2026 forecast? What does it all mean for you? So here it is, the bottom line. The market is finally on steadier footing. But, and this is a big but, this recovery isn't being propped up by some magic wand of cheap financing. Nope, this is a slow, organic improvement, and it's being fueled by the fundamentals: paychecks getting a little bigger and home prices cooling off. It's a more sustainable path back to normal for sure, even if it feels a lot slower. And I think this final quote from Odetta Kushi just nails it. Demand is powered by milestones rather than spreadsheets. At the end of the day, housing isn't just numbers on a page, is it? It's about life. The fundamental need for a home is driven by our personal journeys, and that's the force that's going to keep powering this market forward, slowly but surely. So I'll leave you with this question to chew on. After the absolute chaos and the wild swings of the last few years, maybe a boring housing market, one that just slowly and predictably marches back to normal, maybe that's exactly what the economy and all of us actually need right now. Something to think about.